Right, good morning, everyone. Welcome to the LAT's market snapshot. Just a quick look across at Aussie Yen, a setup that I have been looking at this morning, and I'm hoping to take if a number of things decide to align. Um, we start off here, nice little break and a retest of this level across here, touch there, two rejections here. For me, it's enough of a level to use in this trade. Next thing that springs to mind is the round number here at 81.50. Get it exactly on the round number. Again, another reason to go short. Get the 200 daily moving average on. Again, we are rejecting that below it. So that gives us three reasons on this time frame to look to go short at this level. Bring it down to the 4 hour time frame. See on the 4 hour time frame, nice clear downtrend, making lower highs and lower lows across this time frame. The idea in a downtrend is to try and sell the pullbacks. How we can look to take advantage of a pullback is to use the Fibonacci tool. So we can bring it from the previous lower high down to the low, bring it across to give ourselves a level. This level, the 50% retracement level, matches up with the resistance with the 81.50 round number and the daily 200 moving average. So that gives us four reasons to look to take a trade in this area. We get the 50 moving average on the 4 hour time frame. Again, this all lines up in the one area. Bring it down to a 1 hour time frame. Use this time frame in this instance for two reasons. Again, another moving average, a 200 moving average, joining at this point as well. Um, One reason that I use these time frames for, I'll jump in between the 4 hour and the 5 minute as an execution time frame. You need a time frame to bridge the gap between these separate time frames. So I will look at these time frames to try and find maybe something that might get in my way, might allow me to not take a trade, um, or see if there's something I need to be aware of on the way down. There is a bit of a level across here, so I think I do need to be aware of that. We are obviously a bit away from that at the moment, so I can look to monitor the trade if we reach that level. Um, Down to a 5 minute time frame to look for an execution. You can get a nice little trend line, nice little three touch trend line across here. An opportunity to sell through that. I think we can get a horizontal across here, nice level of support. Get a touch here, get a couple of touches here, and we can have a couple of touches here. Gives us a nice level to sell through. Um, if you look to go short at the where the trend line and support decides to mix, could be a double break, which would be a nice level to go short at if we were to reach down around that level. Um, Again, we need to find a resistance level where we can look to put a stop loss. I think if I get rid of the Fibonacci tool, as it is slightly in our way at the moment, just keep that in the back of our minds that it is there. I think we can look at this sort of a level across here. A couple of touches here, bit going on here, and definitely a touch back here. So I think that is a safe enough level to put a stop loss. If we come down and we do decide to break through this level, we can get a stop above here, 18 pip stop loss, and we can look to target down towards these lows all the way down here. If we are looking for the downtrend on the higher time frame to continue, we can look for trend continuation. There is no reason while looking at this chart that to suggest that that wouldn't continue. We can get a break through these couple of levels here. Do have to be careful and monitor around this level, but we will monitor it if we get down there. The risks to this trade are obviously the equity markets and commodities risk assets. If they decide to go higher, riskier currencies like the Aussie dollar should appreciate against safe haven currencies like the Japanese yen. So that's one thing we do need to be aware of. But on the flip side, if equities sell off, commodities sell off, this will send this chart lower as well. So that would be a good recipe for us to go short.